he said with conviction that he thinks Pfizer stock is very unappreciated in the market at the moment. Hey everybody, and welcome back to H Invests. So, Pfizer, a massive global pharmaceutical company that's had great success with the COVID vaccinations so far. Michael Burry, legendary investor who predicted the US housing crisis in 2007, has a long position on this stock, which is the second largest position in his portfolio. So, is Pfizer the real deal? Are the shares looking good at the moment, or are they overvalued from all of the COVID hype? Let's go through it together, analyze their business, do a valuation, and find out. I hope you enjoy. Pfizer is a massive company. It has a market cap of around 200 billion, and last year it generated 41 billion in turnover. Okay, so you can see on the screen behind me Pfizer's drug pipeline. I'm not going to go into the depths of biochemistry, but what is important to note here is they have a lot of different drugs generating them revenue over time. So, for example, Prevnar, that accounts for slightly over 10% of their revenue. That's a pneumonia vaccine. You've got, Eliquis, apixaban, that's quite big as well. It prevents blood clotting. That's about 10% of their revenue. Ibrance is a breast cancer drug. But the important thing to note here is the diversity of the pipeline. They have their competitive advantages from having patents on these drugs, right? And if they have a diversified portfolio, then if one of the patents gets attacked and the drug becomes subject to perfect competition, then Pfizer have a lot of other drugs it can still use to generate its revenue. So I like to see the diversity, not only across drugs, but these are drugs that all do very different things. Another really awesome thing to note is Pfizer have got much more efficient with their drug pipeline. So you can see here, Pfizer through 2015, they weren't really getting many drugs approved, but now it's up to 21%, and that is beating the overall market significantly by 8%. So it's really impressive to see Pfizer heading in this direction, and it's showing to me that they're really taking their research and development department seriously and utilizing it to its maximum potential. If you're enjoying this video so far and finding it useful, please give it a like. It's really helping the channel grow, and it's much appreciated. So with regard to the Pfizer COVID vaccine, the expected guidance is for it to generate $15 billion of revenue for Pfizer in 2021, which I think is very significant considering their revenue in 2020 was 41.9 billion. That's an extra almost 25% of revenue generated extra. As you may have just seen on the slides, last year in 2020, they generated 8% revenue growth, which I think is very impressive, particularly considering all of the operational headwinds you have because of COVID. It looks like their new drug pipeline is really taking off, and particularly they haven't reaped a lot of the revenue from the COVID sales yet. With regard to doses expectations, the expectation for COVID doses is around 2 billion in 2021. It's quite interesting because if it is 2 billion doses of COVID jabs, and it's 15 billion in revenue, then that implies a price of $7.50 per COVID jab, which we'll see. I don't know if that's going to be higher or lower. In the US, a dose of Pfizer jab currently costs $19.50. On the whole, it doesn't look like 15 billion is an extremely optimistic estimate of revenue, given that it's forecasting 2 billion doses provided in 2021. As you can probably imagine, management were asked many questions about COVID on the 2020 Q4 earnings call with Pfizer. And a lot of what they were saying was that obviously they haven't really reaped the benefits of a successful COVID rollout vaccination program yet. Obviously in 2020, they were putting a lot of research and development into the vaccine, and now it's approved and all the orders are coming in. Now they're going to really see the benefit and they're going to see the increase of revenue. We'll look at those forecasts later on in this video. And management say they really think the stock is undervalued and they're not actually appreciating the growth prospects. At current prices, it's forecasting a PE of 10.4, given what the analysts think earnings are going to grow next year. Another thing about the COVID vaccine is that if we see new variants of COVID that aren't protected by current vaccinations, then what Pfizer can do is Pfizer can adapt its vaccine relatively quickly. It can vaccinate the population with its new variants. And I feel like it's already built up quite a good global brand as being somebody who's very successful with vaccines because they had the first one approved and it's had a lot of orders all throughout the world. So that's something to consider as well, is that if we do see a lot of mutations in COVID and the current vaccinations don't protect against those mutations, then Pfizer can almost turn this into a regular revenue stream where it's supplying the world with new vaccinations that are protecting us against new variants of COVID, as we have our winter COVID vaccinations every year. Although one thing you have to remember with this COVID vaccine is that it's going to bring Pfizer's margins down slightly. Why is this, you ask? Well, they developed the vaccine with BioNTech, right? A German pharmaceutical firm that is much smaller. And obviously because they helped to develop it, Pfizer has to pay a lot of money from the sales to BioNTech. So it's looking like Pfizer's COVID margins are actually going to be slightly lower than a lot of other margins for the other drugs in its pipeline. Pfizer has a wide economic moat. To be fair, pretty much all big pharma companies have a wide economic moat. The reason for this is patents, right? Patents are incredibly common in the pharmaceutical sector. And what this does is it allows you to sell drugs exclusively for a given period of time. You saw in the previous slides that only 8% of drugs actually pass all three phases and get approved. So this shows that there's very, very high barriers to entry for selling the kind of products that Pfizer does. They also benefit from economies of scale, which give it this big, powerful distribution network to sell vaccinations, and they act as a great partner for smaller companies. Will come to Pfizer and they say, look, we'll give you a share of these profits if you help us sell and distribute our drugs, because they lack the resources and the scale advantages that Pfizer have. So it allows it to reap profits of smaller drug companies as well. Okay, this all sounds amazing, H, but what are the risks? Well, I will preface this by saying that pharmaceuticals are not usually the most risky sector. People always need their drugs. They will always pay for them, even in recessions, because health is incredibly important to us all. However, a few of the risks that I can think of is Pfizer has gone up after a lot of big markets, breast cancer, vaccinations, etc., etc. And what this means is because there's a lot of profit to be made, they're quite competitive in the sense that there will always be other big pharmaceutical companies trying to get a piece of that pie. So, for example, Merck & Co., they're developing a pneumonia vaccine which will be very competitive with Pfizer's Prevnar vaccine, which accounts for about 10% of its revenue. So it's always good to watch what the other pharmaceutical companies are doing and where they plan to take on Pfizer's market share in the future. Another thing to consider is in the past decade, we've seen quite a big rise in managed care companies, which will put a lot of pressure on Pfizer to bring their drug prices down. You might see Joe Biden coming in, who pushes for policies as well that support more affordable drug care plans, and this will adversely impact Pfizer's turnover growth in the long run. Okay, so let's have a look at Pfizer's financials. So starting with turnover, we can see it's not been a good story in the past 10 years at all. Consistently falling turnover, some not very good years at all. It's been all right. It's stabilized and grown slightly in the past couple of years. Yeah, it's impressive they managed to grow it in 2020, given the operational production headwinds and the fact that they're not really benefiting from their COVID pipeline yet, but still nonetheless, in the long term, this is not a great trend to see. You can see incredibly generous forecasts from Pfizer. I think these are very generous. They're big expectations to live up to. Obviously, the COVID vaccine is going to be a big part of that, plus all of their new drugs in their pipeline. But this is still a massive increase from what we've seen. Turning to operating profit, again, basically this shrinking turnover growth has been reflected in operating profit and also in post-tax profit as well. Yeah, not looking great at all. Yeah, it's not looking good for the income statement. Okay, so turning now to the balance sheet, this actually looks a lot better. If you look at current assets, current liabilities, it's looking very good. What's that going to be? It's going to be a current ratio of 1.5-ish, just shy of 1.5. Cash and cash equivalents. I mean, that's fair. Reasonable amount of cash on the balance sheet, nothing huge. But the short-term borrowing got paid down a lot, which is nice to see. And long-term borrowing, yeah, it's okay. I mean, if you think about some of these metrics, Their interest cover is about 8 at the moment. Their net debt to EBITDA, I believe, is 2.3. So we're looking okay from a debt standpoint. It doesn't seem like it's a company that's in bad financial health at all. If we look at the cash flow statement, net cash from operations, this has been sustained quite well considering the decline in turnover growth, which is nice. How's the free cash flow doing? Again, it's okay. I mean, it's obviously been a shrinking pattern. Huge growth forecasted for 2020 on free cash flow, which I think is nuts. We'll get to all of that in the valuation, but yeah, certainly looking pretty crazy. We can go to dividend analysis as well very quickly if you look at this one here. So looking at the dividends, dividend is growing year after year after year, which is good to see. Dividend payout ratio, 68. I mean, look, the yield is 4.4%. And I think a 60 to 70% dividend payout ratio is okay. I think 80 with Pfizer, it's too high, particularly when there's a lot of stuff that they want to do and like new investments in the business, particularly with COVID, but less than 70% I think is okay. And 4.4% yield is very generous. Look, it's not as well covered than it was back in the day. Like they had very, very good dividend cover, but 1.5 is certainly sustainable. And at a 4.4% yield, it's pretty high and definitely at a level to get income investors incredibly interested. So, but dividend looks very, very good. Not a great income statement, but the other financial statements do look pretty healthy to me. Okay, so here we have a Pfizer chart, and this is where things get really interesting. So you can see, let's just go back to last 10 years. So this is this is like the last 15 years. So you can see big increase kind of after the GFC, but then turnover was flat. So you'd expect the stock to be relatively flat. I think it went up a little bit just because we saw it so well covered by the dividends. So a lot of investors and funds might have just been investing in Pfizer as an income stock. Let's look at the last year. This is where things get really interesting. In fact, we want to be looking at this section here. So this was where the stock was trading pre-COVID crash. So we knew nothing about COVID, September, October 2019. The market was comfortable with it trading in the 35 to 40 range. That's where they thought it was worth. And then we saw the COVID crash, went down to 28, and then since it's been bouncing around the 30 to 40 range. They were developing the vaccine from April 9th. I believe they announced that they were starting working on it. And this was where it started to get passed for approval by the massive countries. I think you can see the big news here with these two spikes. But since then, it's back down at 34, which I find really interesting because for me, I think the fundamentals on Pfizer have improved a lot more. Their drug pipeline is looking really good. They've got COVID, which is looking to generate an additional 15 billion in revenue on top of the 40 billion that they usually generate. And I don't really think the market is appreciating this. It's not like it's some, biopharma startup with an absolute mountain of debt that have got all of their hopes pinned on the COVID vaccine. We're talking about an incredibly well-established, well-diversified pharmaceutical company. And I do find it strange that the market, it seems to be valuing or pricing the stock, let's say, as worse than what we were seeing pre-COVID when they're the leader in terms of developing a COVID vaccine all around the world, which is going to do very well for them financially. Okay, so let's take a look at Pfizer compared to its competitors. So you've got the big pharma names here. You guys probably recognize a lot of them. You've got Glaxo, you've got Johnson & Johnson, EY Lilly, etc., etc. Yeah, Pfizer is looking very cheap on a PE and EV to EBITDA basis. In fact, for a forecast PE, this is what the CEO was talking about on Pfizer's earnings call. He thinks it's very cheap on a price to earnings basis, given the success of the COVID vaccine. Second only to Bristol Myers Squibb, who I'm actually invested in as well, and I might do a video about them. Forecast, EV to EBITDA, again, looking cheaper in the bunch. Forward for price to free cash flow, again, it's the second cheapest other than Bristol Myers Squibb, so it's looking very good. EV to free cash flow, looking more of the middle of the bunch here. I mean, what is it? About fifth cheapest, roughly in the middle. But still, overall, on a valuation perspective, on a relative valuation perspective, it's looking pretty good. EBIT margins, let's sort by EBIT margins. So Pfizer comes fourth out of the 10, which is pretty good. Its return on invested capital is low though, so there might be something to consider. Maybe this is because it's been working on developing a lot of new drugs. It's new pipeline with COVID included, so it hasn't really got the returns from that yet. That's why we might be seeing a low return on invested capital from Pfizer this year. But it is something to consider when this is pretty low compared to a lot of the other pharma companies. Interest cover, again, this is what I was talking about earlier. Like, I see no problem with Pfizer's debt. In fact, I don't see much of a problem with most of these debt. AstraZeneca and Bristol Myers Squibb are looking pretty low though. And then forecast turnover. So here we go. So you've got over 3 years. Pfizer doing pretty well on the whole. And if you look at it on a 1 year basis, Pfizer actually topped the chain. Analysts are clearly forecasting a lot of sales growth from the COVID vaccine and the new drug pipelines coming up. And if you're looking at free cash flow growth, again, if we sort this, Pfizer comes fourth over 1 year, and over 3 years, it's also coming fourth. So Pfizer seems to be doing pretty well. It seems to be on the lower end of the valuation spectrum with regards to big pharma, but then on the upper end of the growth spectrum. So all in all, I think Pfizer looks pretty good compared to its competitors in big pharma. Okay, so if we look at what management are doing with their shares, we can see there's quite a lot of net selling at the moment. Past 3 months, only 43,000 shares bought, but over 1 million shares sold, which is quite significant. Although, as one of my subscribers, Mitch, pointed out, there's 1,000 reasons why management might be selling their shares. It might be completely unrelated to the share price and that they just need some liquidity or they're cashing in a bonus, etc., etc. But there's only one reason that people might be buying. So it's a consideration to see that there's so much net selling, but it might not necessarily mean that management aren't bullish on the stock. And as I actually mentioned, the CEO in the earnings call just a few weeks ago, he said with conviction that he thinks Pfizer stock is very unappreciated in the market at the moment. In fact, I just wanted to read to you what the CEO said, just to make it completely transparent and clear what his point was. He said, on response to a question, Greg, thank you very much. I fully agree with you. I don't think we're receiving a lot of credit, not for the vaccines right now when you see the stock price, but mainly for our business and our pipeline. This is business that is growing at 6% and double digit, the bottom line, and excluding any COVID. And it clearly deserves a much, much higher multiple in this industry. The same comes even more when you speak about the COVID-19 vaccine. But I think clearly people should see much more into that. Okay guys, so here we go. Here is the discounted cash flow on Pfizer. So effectively, what we can see here is we can see the previous cash flows. As I said, it's been not great the past 5 years for the business, but management are forecasting a lot of free cash flow growth in the future. When you annualize these three over the 3 years compared to 2020, it comes out about 20% per year over the 3 years. But obviously, most of that growth is just in the first year in 2021. So they are being very generous. The discount rate is looking very low. For two reasons, Pfizer having a low volatility stock, so the beta is low, and also they're able to borrow at relatively cheap rates because they're financially healthy. So, I mean, that's what you've got to consider. So here we can see the matrix growing. I did it from 0 all the way up to 20%. The reason being 20% is that this is obviously where the analysts are going. Do I think it's going to grow 20% annualized? Highly unlikely. It's just, I could never say that it's really going to be fair value up here, just because whilst I know that they have a very good pipeline going forward and that COVID is going to bring in a lot of extra free cash flow, it's not me. I'm too conservative to say after free cash flows have not been growing, 20% growth. However, given the success of their pipeline and the success of the COVID vaccine, bringing in an additional 15 billion in revenue, I do think they're going to grow. So here I've highlighted the sales where I think it's most realistic. I think 6% discount rate is quite low. Obviously, WACC is coming out at 6.6. I think 7% is definitely reasonable. I think 8% is too high because, as I said, the pharmaceutical industry is one of the safest industries you can invest in. So I think 7% discount rate is definitely right for Pfizer. And do I think they're going to grow? Yes. So I'm not going to go with 0. I think 4 to 8% growth is reasonable for a conservative investor. So that gives your share price targets at either $44 or $53. Which gives you upside of either 27% or 55%. So it's looking pretty good from a discounted cash flow perspective. Okay, and here's a picture if we look at forward earnings per share and PE. You can actually see here again, it's the same pattern. Pretty good earnings per share growth in the past, actually, which is nice to see. Quite a big drop in 2020. And then you've got this huge rebound that the analysts are forecasting. This does seem pretty insane, but like, there are a lot of analysts that cover Pfizer, and the range, even the very lowest one, was like 300 or 310. So it seems that pretty much all the analysts are very positive on Pfizer in financial year 21 because of its pipeline. And then you can see thereafter, the earnings per share growth kind of returns to normal and what we've seen in the past. So if you kind of average out this growth rate over 5 years, you get 11.62%. When you average out the PE over the past 5 years, you get just shy of 18. And at the 6% discount rate, we saw the analysts, it's forecasting about $45, which gives you a lot of upside, 31% upside. These are the different scenarios that I've kind of plotted for here. I like to be a little bit more conservative. So the way I see it in the most realistic scenario is I think growing at 5 or 10% is reasonable. Again, I think they're obviously going to grow given everything that's going on with the company at the moment. 15%, I think that's way too high, but 5 to 10%, 5 to be very conservative, 10 to be moderately conservative, but still less than what the analysts think. And then a PE of 18, maybe, that's what we've seen in the past. That has been brought up by a couple of high years in 2020, 2019, so we might see a PE of 16 as well. But again, it's looking reasonably good from these price targets, not a lot of downside, a relative amount of upside, particularly if you think if they can grow with a PE of 18, at 10%, then you're looking at 26% upside with a target price of $44, which is pretty good, and that's similar to what the analysts think as well. So on the whole, this looks reasonable, not hugely undervalued, but a decent margin of safety nonetheless. In conclusion, I think Pfizer shares are a buy at the moment. I think given what we've seen with the company, I think the market are really underappreciating their growth potential going forward. They're in a non-cyclical industry. They've really turned around their research and development team, getting drugs approved at record percentage levels. They have a well-diversified drug portfolio, and they're also front-running the COVID-19 vaccination program, which is set to generate them $15 billion of additional revenue in 2021. Their dividend yield is 4.4%, which is a lot for income investors, particularly with the current interest rate situation that we're seeing, and the fact that their dividend is fully covered by earnings at 1.5 times and free cash flow at 1.4 times gives me a lot of confidence. If we look at the valuation, it does look pretty cheap at the moment. It's looking slightly better on a discounted cash flow perspective than from an earnings per share perspective, but I think it looks pretty good nonetheless. And given Pfizer's stability, there's a large enough margin of safety for me to buy the shares. I hope you guys enjoyed the video and found it useful. I've been H Invests, and until next time, happy investing.